Look at Tesla just being ridiculous. Can we talk about this for a minute? What is going on here and how do you even manage a stock like this if you have a position? Well, that's what we'll talk about. The stock, what Elon is doing and what he should do. And yeah, it's going to be a great video. And of course, if you're looking for more explosive stocks like Tesla, see this little SpaceX rocket in the background, check out our checklist, all free, teaches you how to find them. There's a link down below in the description and comments. But okay, Tesla, what is causing this crazy move? This is like over 50% in just a few days. It's getting nuts now. Well, it looks like there's a few reasons. The first being short covering. Now, you know how much hate Elon gets, right? And I talk about the Tesla Q crowd and how stupid they are all the time. Not stupid for their analysis, because maybe it is correct, which we'll talk about in a little bit, but just stupid for like being so obsessed with Tesla and being so against Elon. It's all ego. But it's not just talk, because we know there is a ton of short selling occurring in Tesla. And short selling is basically when you bet against the price. So you make money when it goes down. Well, with short selling, the opposite is true too. So if you're short shares of Tesla, if it starts going up, then you're going to be losing money. And if you're shorting something, then you're on margin because you're selling shares that you don't have. So when the position works against you because of that margin, it's not going to be an orderly move out of that stock. You're going to get blown out. You're going to get margin called. And that's a big reason why you've seen this meteoric rise, because every time the stock price goes up, that's more short sellers getting their margin call. And what happens is they have to buy back the shares that they sold short. And what happens when they start buying? Well, that buying pressure pushes the stock price even higher. So what you end up getting in this scenario is a reflexive cycle, because more shorts are blown out, they have to buy, which pushes the prices even higher, that blows out more guys, and then it keeps going. And this is what's called a short squeeze. So I was talking to Alex and Tyler about that earlier today. Alex pulled up this Bloomberg chart real quick, which you can see this blue line right here is short interest. And then this white line is the price of Tesla. So you can see right here nearer to today, as price kept going higher, short interest was going lower and lower because all these guys were getting blown out. And you can see it's at all-time lows now. So most of the shorts are gone. Because like I was saying, if you're on margin, it's very difficult to hold. It's costing you a lot of money and you're getting margin called when something shoots up like this. And like I said, it's almost historic lows because it's almost near zero. And you can see how high it was back in the day. Tons of short sellers, tons of bears, tons of Tesla Q guys in this stock. So that's reason number one why the price is shooting up like this. And reason number two is just pure retail euphoria. So I mean, as many people as you have hating Elon, you have an equivalent amount just loving him. I'm one of those people who just loves him. He posts awesome memes, makes EDM music, builds rocket ships, does all this crazy stuff, basically whatever he wants. He sees a problem and he fixes it, whatever the problem is. It is like the closest thing we have to a real life Iron Man, Tony Stark style. And a lot of people feel the same way, especially more retail oriented people that aren't, professionals in the market. But if you have a Robinhood account and you are managing money, trying to learn, Tesla seems very appealing, especially during a time like this where it just keeps going up day after day and you're following a CEO who's posting memes. It's like, it doesn't get better than that. So people are piling in their money. It's fun. I'll admit it. It's like super fun. Is it the best strategy? Well, we'll talk about that in a second, but regardless of whether it is or it isn't, it's happening. People are buying. There's a lot of strong sentiment in this stock, which is the reason why you should never be shorting it in the first place, because you could get a ridiculous run like the one we're having now. And that's what the market is based on more than anything, more than valuations or any of that. It's based off sentiment. How do people feel about it? So I was talking to my friend and we were talking about how ridiculous the Tesla valuation is, especially compared to other car companies. So take a look at this market cap table. Ford is at 35 billion, GM 48 billion, Honda 47, Toyota 228 billion. That's the biggest one. Then you have Tesla over here at 140 billion. It is bigger than GM, Honda, and Ford combined based off market cap. And that's insane. And it's insane from a valuation perspective because Tesla is a relatively small company compared to these huge auto companies. And they're also not profitable. They lose a lot of money. But for some reason, their valuation is huge. And that some reason is because for tech companies and companies that are fueled off sentiment like Tesla, people aren't valuing Tesla for today. They're valuing it for 20 years in the future because they're thinking, okay, Elon is about to completely change the world with his cars, his rocket ships, it all gets combined together. His solar strategy, going to Mars, etc., everything, right? So it's like, imagine what this company can be in the future. But when we think about the future, even the next 5 years is so difficult to predict. Do you really think that people are able to predict 20 years out? And these aren't dumb people. This is just how the stock is being valued. The answer is no. You can't predict predict something 20 years into the future. Maybe large trends, but the success of Tesla, no. So if you're trying to do that, and if the stock is valued based off of that, then really you could say it's worth anything, right? Okay, so say Tesla was at 150 billion market cap right now. Well, what's to stop it from going to 200 billion? Would the reasoning change at all? No, you'd still be thinking, oh, solar energy, electric cars, self-driving, rocket ships, etc., etc. And I know the rocket ships are a different company, but it all gets grouped together because you're betting on Elon. So what are you going to say at that point? Oh, we're only going to rank it at 150 billion if Elon has completely self-driving cars by 2025. But if he gets it done by 2024, then 200 billion for sure. It's all air at that point. They're like barely real numbers because there's nothing to even attach it to. You're just planning. You're just like pontificating into the future. What could happen? It's like using your imagination. And that's what happens with these valuations of tech companies when you're thinking that far into the future. So don't get mentally stuck on that idea. Anything can be valued at any amount at any time because again, even valuation goes back to sentiment. It's just people. So how do you even play this stock? Like if you look here, I've already marked this up. I got a momentum system that I use, so it has very specific rules. The system told me to get into Tesla on November 1st. So from November 1st until now, the thing is up almost 180%. Crazy. But you can see right here that I've been taking profits the whole way. So on 12/16, my first target was hit. I took 25% off. 12/26, another target was hit. Another 25% off. 1/13, target 3 was hit. Last 25% off. So at this point, I only have 25% of my position in Tesla. And that's the portion that's been riding this entire time since the first. So even that small portion, 1/4 of my original position, is up huge right now. So if you look at that, you would be thinking that I'm kicking myself. Why didn't I hold my entire position the whole way? Well, first of all, there's no way to know that Tesla was about to do this. And second of all, it's always good to be taking profits on the way up. And it's always good to be following your strategy. So if my profit targets are hit, I'm taking the money. And the whole reason there's no profit target on that last 25% is in the very rare cases where something like Tesla happens. This is not something that you see every day. It's pretty rare. Most of the time you're happy if you hit one target, oh, 2 targets, that's amazing. And then the stock turns around and you're glad you took your profits off the table and you're glad you moved your stop up. It's only that rare occasion where you can look back and be like, man, if I kept all my money in it, it would have just shot up like crazy. But you shouldn't be building your strategy around that rare occurrence. Unless you're like a discretionary genius global macro trader, basically George Soros going all in to break the Bank of England. Otherwise, you should be playing it a little more reasonably. Always a good idea to take your profits when you can, which is when the stock is going higher. And that's why if Tesla crashes hard from here, which it's, likely to do at some point, maybe not right now, it's going to be okay because, I had my profits, I was taking them along the way. You can never go wrong taking profits while the stock is going up. Now, another interesting thing to talk about at this point with the stock price this high is what Elon is going to do. And this is where I want to hear your comments because this is all just speculation. We don't know what he's going to do, but I want to hear what you think down below. So I think something smart to do right now is a secondary offering. So a secondary offering is a sale of new or closely held shares by a company that has already made its initial public offering. So it's already a public company, now they're just selling more shares. So the idea is with a stock price this high and people so into Tesla right now, you could release new shares and they'll most likely buy them up. And why would you do that? Well, Tesla, as I mentioned before, they don't make much money. All these bearish theses about them, they're true. Tesla is always struggling, always has it rough. So if you offer new shares onto the market, you're going to pocket all that money. And that could really help Elon to get this money when the times are good and everyone wants to give it to you, for once again when the times are bad, which are going to come. And that's what they always say in venture capital and business is raise money when you can, not when you need it. Because when you need it, you might not have the opportunity. If Tesla is down in the doldrums, stock price is super low, no one wants to give them money. So raise that money now when everyone's excited about you and hold on to it for those harsh times. So it says companies perform secondary offerings for a variety of reasons. In some cases, the company might simply need to raise capital to finance its debt or make acquisitions. In Tesla's case, yeah, they need cash flow just to keep producing cars, really. I think they're always just on the edge. They live on the edge. Now, what happens when you have this secondary offering is that you will dilute your share price because now there's more shares on the market, right? So that makes each share be lower priced to keep the same market cap. And with more shares, it's going to take more buying pressure to push that price up. But again, like right now, Tesla is at 866, almost 900. And if it goes to 1,000, it's such a great time to release those shares. Will Elon do it? I hope so. Again, comment down below with what you think and if that's even a good idea. And what's really interesting is what he could do with all that money. We already talked about how Tesla's market cap is way higher than these other car companies that have been around for over 100 100 years that are much bigger and make money. So what if Tesla used this share raise to buy one of those companies? What if you bought GM for a cool 48 billion? I mean, it would allow Tesla to immediately expand and have control over all these extra factories, all these people. They might have some more steady cash flow to support all this crazy stuff that they're doing. Just the infrastructure gains would be awesome because it's not easy to build these factories. Again, is that in the realm of possibility? I don't know. It could happen. Again, let me know what you think down below. All in all though, I am so happy for Elon and his stock price just crushing all these haters. It's nice to see and he deserves it. He's doing the hardest stuff. Like I said before, he should just be government sponsored. But when your stock price goes wild like this is even better. Maybe. I mean, the government could just print money, right? Kind of. But I'm happy this is happening. Well deserved. And again, if you want to find more stocks like Tesla, check out our checklist. It's actually going to help you find stocks that no one has heard of. But you're going to see that explosive growth become more standard than you would with like a larger company like Tesla. And you'll see what I'm talking about when you download this free guide. There's a link down below in the description and comments. Worth checking out because it's free. Just put your email in and I'll send it over to you. So do that and then subscribe to this channel, hit that bell so you get an email notification when our new videos come out. Like this video, comment down below. Like I said a bunch of times already, I love comments. And that's about it. I will talk to you soon. Stay fallible out there. Bye.